Assalamu alaikum and hello everyone. It's me Sajid Hussain on behalf of HS Business and IT Solution. And yes, today we'll be talking about financing a business organization. To support this session with me, I will be co-hosting Mr. Hamoud Nishad, who is with me. Thank you, Hamoud.
Thank you.
Okay, so financing a business organization, this topic is very important for individual, for student, those people who want to start a business, or especially the students who are in the business field or the business studies. And if they watch this session, it will be really helpful for them. To support this session, I have invited a guest who is Mr. Mubashir Qurashi. He is very knowledgeable, very expert in education, serving in the education for the last 20 years. So thank you, sir. Thank you for joining in today.
Thank you very much, Sajita, for taking me live on board. Thank you very much.
It's really a pleasure to have you, sir, in the session today. I just want to add up, Mr. Mubashir is doing his PhD degree from Cardiff Metropolitan University, and he's on the very last stage of his degree. So he will be telling us about the different sources of finance and how basically these can be helpful for the different types of the businesses. So thank you, sir. It's up to you now.
Thank you very much, Saisa. First of all, Assalamu alaikum, both of you, and to your listener.
Walaikum salam.
So, the topic, as we have discussed, is financing a business organization. So, today we will discuss about different long and short-term sources which are available for different business organizations. But before moving forward onto the sources of funds, I think it is better that we will discuss about the types of business organizations. Okay, so even I think it is better that we can start with the business. So we can say that business is any activity which is started by an individual or by a group of peoples to earn profit. So the main idea behind business activities is to make money, is to generate profit. Okay, and there are three types of business organizations. We will discuss about the types of business organizations only today, because there are different other business organizations as well, which are not started for generating the profit. So these organizations are not in our scope. So the first type of business organization
I think sir has some internet connection problem. I'm sorry, Weaver. I think there's some technical glitches, so we can't hear our guest. So we have to wait for it, and hopefully he will get back soon. Can you hear, sir?
Yes, I can hear you. Can you hear me as well?
I think might be there was some internet connectivity problems, so no problem.
Okay.
Yes, we can hear you now, so please go ahead.
Okay. So we have started our discussion related with the business organizations. So there are three types of business organizations. The first one is sole trader. So the sole trader business is started by an individual. The important feature is that there is only one owner of that sort of business, because sometimes the students have that sort of misconceptions, or the peoples have these misconceptions. They can see that an off license shop and there are 8-10 people are working, so they thought it is not a sole trader. But the important point to distinguish with this sole trader business with any other type of business organization is the investment. If only one person is investing money in the business, that is known as sole trader. Okay, so that sole trader has a right to involve in the business affairs of the organization. Even he is managing all the activities of the business. And at the end of the year, if the business has generated profit, then that sole trader has a sole right on all the profits. And if there is any loss, then sole trader has to bear this loss. The liability of the sole trader is unlimited. So, what is the meaning of unlimited liability? Unlimited liability is, you can say that if an owner has invested £100,000 in the business and he has taken £50,000 of loan as well, and he was not able to manage his business, he lost everything. So, he is responsible to pay these liabilities as well. So the liabilities are unlimited liability means that the sole trader has to pay each and everything. And what is the tax status of the sole trader? The sole trader business has no legal separate legal entity. It has not separate legal entity. What is the meaning of separate legal entity? It is based on the status. So the status of the business owner and the business is same. So in the eyes of law, the business and the owner is not considered as different. Both of them considered as same. So whatever profit the owner is earning, he need to pay tax on that, because the earning of the business is considered as his personal income, and the sole trader has to pay tax on that, and business has no tax liability. Okay, so that is about the sole trader. These are few main features of the sole trader. So after that, yes, do you want to?
Yeah, before you move on the second type of the business, I would just have a question for you. If
Mhm,
we talk about the opportunities for a sole trader
mhm,
comparatively with other businesses, uh,
mhm,
I mean, normally it is her like if you wanna have sole trader business, it is very important that your personal credibility, okay, or for example, how basically you do the dealings and the businesses with individual or with the corporation. Okay, this is very important that you must have the man of words. Your dealings should be very fair,
yeah,
because the sole trader business, most of the people will be interested to deal with you, to work with you, if you have the fair dealings. Okay, if
mhm,
if you provide the good services, or for example, you can say what are the dealing you are doing with the other individual or the businesses. So it
mhm.
means you need to basically build your own image as a person instead of as a business. Is it true, sir?
Yes, yes, you are right. You are right. Definitely, definitely, you have to be honest. That is the main quality of any businessman. Because even it is very important for a person that he will be honest. He will he will act as he is saying. And one more thing, as you said about the financing, that the dealing with the other people's and the financing. So here in UK, you know that when you have opened your first bank account, there are different credit rating agencies like
Yeah.
experience. So these credit rating agencies are collecting information about you, and they are generating your credit report. And you can see your credit score as well. And it is true for the business organizations as well. So whenever any person has started a business organization, so the credit history report for that business organization is also start building by these credit rating agencies. And if a person is not fair in his dealing, let's suppose he has purchased the goods on the credit basis from a supplier and he is not making the payment in time, then all that information will transfer on his credit report. And very soon he will find himself in trouble, because if he will apply for any short term loan from the bank will refuse. If he try to get any loan from, if he try to purchase the goods on the credit basis from the supplier, he most of the organization will refuse him. So that is how if you're talking about the financial dealings, then it is very important that you make the payment on time, in time, so that you have good credit history and credit scores, and you can get that sort of facility in the future as well. Otherwise, if you are not honest, if you are not fair in your dealings, then definitely peoples will not interested to do business with you. So whatever you said, I totally agree with that. It is true.
So is it a good idea the individual who don't have enough knowledge about the business
Mhm.
and they don't have plenty of the finance as well, so is it a good idea for them to just start as a self-employed or as a sole proprietor, sole trader business, and once they built up their reputation in the market with the clients, they get some sort of the experience, okay, and later on of course they can move to the private limited company or they can extend their business as well in the future.
Yes, you are right, Sizer. It is correct, and that is normally happen. People
Mm,
start their businesses as a sole trader, and
mm,
if they find the demand of their product or their services, then they want to expand their business. And
mm,
for expansion, they need money. So
mm,
then few sole trader businesses are converted into partnership businesses,
mm,
and some sole trader businesses are transferred themselves from private limited company, or later on, if they
mm,
are doing well, then they can convert it into the public limited company as well. And you can see so many examples. The
mm,
best one is which I can give you, is the
mm.
favorite book of all the students. Can you tell me what is the favorite book of the students? I think there is one book which is favorite for most of the students, and that is Facebook. So
Sure.
the owner has owner has started like that, and
Mm,
in 2012, the
mm,
owner has sold the equity part of his ownership to the other peoples, and it becomes a company. So whatever you said, it is true as well. That is
mm,
how the thing started. The things
mm,
are started from the very small scale, and as the business progress, then some sole trader converted into the partnerships or in the companies.
mm.
You're
Thank you, sir. Now you can move to the next type of the business. Over to
right.
you.
Okay. Cool. Okay. Thank you very much. So the next one is partnership, and whatever you said, that is the starting base for that. That why the people are starting partnerships. The reason is that if their business idea is good and they find lot of demand in the market, then they need more funding so that they can expand their business. So the businesses are converted from sole trader to the partnership. And what is a partnership? Where two or more than two peoples are investing money in the business. Okay, so in that way, if it was a sole trader, then in that way, sole trader can get funds from the other peoples as well, and the other peoples may invest in the business. Why? Why? Because they know that the business is expanding and they can make good money in the future. So that is how the sole trader businesses are converted into partnerships as well. So that is a business where two or more than two peoples are coming together, they are making investment, and they take part in the activities, in the operation activities of the business. Okay, so the peoples who have invested money in the partnership, they are known as partners. So these partners are working for the organization, and at the end of the year, they calculate their profit. If the business has generated profit, then that profit is distributed among the partners based on an agreed sharing ratio. Normally, that agreed sharing ratio is decided among the partners at the start of formulating a business under partnership. So that partnership or that sharing ratio is based on the investment of the individuals. Let's suppose there are three parties, three persons, all of them has invested 100,000 pounds, 100,000 and 100,000. So they have decided that they will share the profit on the equal basis. Okay, or there is a possibility that one person has skills, but he don't have money, so he can share his business idea with others, and he can say that I will involved in the operations because I have the essential skills, and you can contribute money, and that is how we can start the business. And the profit sharing ratio, again they can decide. There is a possibility that the person who is contributing through his skills, he is getting the maximum share of the profit. So it is not based on the investment of the people, but it is decided among the partners. So if the partners are happy with any partners with any sharing ratio, then they can move forward.
Mhm.
Okay, so that is about the sharing of profit. The second important point is the losses. So if there is a loss, then who is responsible for these losses? So partners collectively responsible to pay all the losses. Why? Because their liabilities are unlimited as well. So, same like sole trader, the liability of the partners is unlimited. So, what is the meaning of that? That whatever is the amount of losses, the partners have to pay that money collectively. So, they are responsible to pay for all the losses if there are any.
Mhm.
Okay, the next one is the payment of taxes. Again, again, that partnership business, the owners are not considered as separate from the businesses. So the profit of the business is distributed among the partners, and that will become the personal income of the partner. And then partners need to make the payment of taxes on their own money because that is their earning. Okay, and in that way, we can say that the business organization has no tax liability, but the partners have. So whatever they generated from from that partnership business, they have to pay tax on their own income. Okay, and definitely, the partners are taking parts in the affairs of the business. Okay, so that is about partnership, and now we can go to the third type. The third type is company. Yeah, I think.
I will stop you, sir. Hamoud, do you have any question before the sir move to the third part of the business?
Now, is all right with the sole traders company. I have a question with the private and a public limited company. So just, sir, you can carry on for now.
Okay, okay. Thank you very much. So the companies, there are two types of companies. One is private, second is public. I will go to that detail. But first of
Yeah.
all, I just want to tell you what is company. So the main difference between companies and the other types of business is the legal status. Okay, so the peoples who want to start the business under companies, they have to complete different legal formalities. Once they have completed the legal formalities, after that, they are able to create an entity, or you can say an artificial person. And that artificial person has a distinct name. For example, Tesco, BMW, Apple, all of them are companies. Okay, so when a company is formulated, is established, then now the owners are different from the organization because organization has a legal status. It is an artificial person, but it has a legal status. So anyone can sue that company, or the company can sue someone on its own name. So if let's suppose there is a conflict between Tesco and let's suppose person A. So Tesco will sue person A. That will not be from the owners of Tesco to person A. Okay, so the name of the company will be there because it has the legal status. Okay, so that is the main difference, the separate legal entity. And who are the owners of the company? So the owners of the companies are shareholders. So who are the shareholders? So the peoples who purchase the shares of a business of a company, they will become the shareholders. And what is a share and why shares are there? That is the next question. That why these shares are there. The answer to this question is that normally large scale projects are started under that sort of business type. Okay, and lot of money is required, which is in billions or millions of pounds, and it is very difficult for one or few small investors to invest to contribute that much money and to start that project. So for that reason, the total money which is required, it is divided into parts. For example, a business organization want to start a business and it needs 10 million pounds. So what the business owner can do, the people, not owners, the people who are starting that business one, what they can do, they can divide that 10 million pounds into 10 million shares, and where the price of each share is £1. And now that £1, that much small money, small investment is required to invest money in the business. Okay, so that is an opportunity for the small savers as well, that they can contribute in the economic development of the company, of the country. Okay, if you have 500 pounds, you can purchase 500 shares and you can give your input in the economic development of the company. So it is that much simple. Okay, so that is how these shares are sold to the peoples, to the general public. Now I am talking about general public. So I think it is better to explain you, because Hamoud said that what are the types. So to explain what are the types and how we can distinguish the two types. So the two types of companies are private limited companies and public limited companies. And what is the main difference between the two? The public limited companies can sell their shares to the general public, while private limited companies can't. Okay, so here, when we are talking about companies and the companies selling shares, we are talking about public limited companies. Because public limited companies can issue prospectus, give the information about the expected risk and rewards to that venture, and that is how they can raise funds by advertising that offer. Okay, so that is about the ownership. So the peoples, when the company is selling the shares, the peoples who purchase the shares, they will become the shareholders. So let's suppose if you have 500 pounds, you can purchase the shares of Tesco and you will become the owner of that much money. That much you can say ownership is with you. Okay, so that is about the ownership of the company. Okay, liability of the company, because we discussed about the liability of sole trader and partnership as well, so we can discuss the liability of the companies. The other main advantage of company is that the liability of the shareholders is limited. And what is the limited liability means? That whatever the shareholder has invested, he can lose maximum that much money. For example, there is person A. Person A has purchased the shares of £1,000. So he can maximum lose £1,000, not more than that. And there is person X, let's suppose. He purchased the shares of £100,000 of the same company. So he can maximum lose £100,000, not more than that. So there is a limit to the liability, and that limit is based on the investment of the individual. So that is about the liability. And the next important point is the payment of taxes. So I think you have heard that phrase that corporate earnings are taxed twice. And
Yes.
why they are taxed twice? Because sorry, because we said that are companies have the separate legal entity. So Tesco is a company which has the separate legal entity. It is doing business, and at the end of the year, Tesco made the profit of, let's suppose, £1 million. So Tesco need to pay tax. As we work, we have to pay taxes. If we earn above than a particular threshold, we have to pay tax on that. Same is true for the companies. So companies need to pay taxes as well. So first of all, companies will pay tax, and after that, the profit of the companies may distribute it. I said may because some companies are distributing the profit, some of them are not. So the companies may distribute profit to the shareholders. And if let's suppose the company has distributed profit to each shareholder, dividend, the profit which is distributed, it is known as dividend. So if the Tesco has distributed, let's suppose, 10p dividend to one shareholder, and let's suppose a person has purchased 1,000 shares, so definitely 1,000 times with 10p will be £100. So he will receive £100 of dividend. So when that person will receive that dividend, then it will become his personal income. And then that person has to pay tax on that as well. So that is how the corporate earnings are taxed twice. First of all, company need to pay tax, and after that, the shareholders have to pay tax because dividend will become another source of their income. Okay, so that is the meaning of taxation.
Uh, I will cut you, sir. Here. So normally the companies pay the taxes on their profit. That's normally called the corporation tax. So that's the first term, I believe, that on the first instant they are paying the tax. And when after that the profit is claimed by the shareholder, then they will pay again the tax on the dividend. So that's why you are saying like it is twice tax.
You're right.
You use the term like may not be divided, may not be distributed the profit. So when we say like they are not taking the profit or they are not distributing the profit, does that profit remain in the company for further expansion, or where that profit will go?
You're right. As you said about expansion, you're right. We will talk about that in detail. So
Mhm.
let's suppose a company has generated 100,000 pound of profit, and
Mhm.
then they have calculated their EPS. EPS is earnings per share. It is an accounting ratio. So what is
Mhm.
the EPS? That the earning on each share. Let's suppose that EPS of a company is £1. So after that, the top management need to decide that how much they want to distribute out of that £1 to the shareholders.
Mhm.
Some companies are distributing everything which they generate. Let's suppose EPS of £1 that will be converted into DPS of £1. That the dividend of £1 will be distributed to the shares. Normally, the companies which are not finding any expansion opportunity, any investment opportunities, they distribute that money to the shareholders because there is no use to retain that profit. But there are companies which are growing, which are expanding, which will which you can say they found out some investment projects and they want to invest in that. So that sort of companies are retaining a part of profit. Let's suppose EPS is £1, so they decided that we are going to pay 10p dividend. So 90p dividend per share will become the retained earnings. And that
Mhm.
retained earnings will be used by the organization for future expansion. We will come to that point when we will talk about the sources of funding.
All right.
Okay. Okay. So the last thing which I just want to discuss about the companies is who is participating in the affairs of the company. Because for the sole trader, we said owners can directly participate, even they have to. Partnership, they have to as well. It is true for them as well. But what about companies? We said that the companies are selling shares. And in our previous example, I said that a company has sold 10 million shares. So
Mhm.
let's suppose 100,000 people have purchased these 10 million shares. So do
Mhm.
you think that 100,000 people can come together and they can work? It is impossible. So that is why these shareholders have the right to cast their vote in the directors election. So the
Mhm.
people who are getting maximum votes, they are elected as the directors. And that is known as board of directors. Collectively, we said that they are the board of directors, and these directors involved in the affairs of the organization. Even they have to manage the affairs, they have to make the plans, policies, strategies, and the implementation, and they have to check and balance everything. So it is their responsibility. So the individual shareholders, they are not directly involved in the affairs of the company. Okay, so the ownership and the management of the company is different. And how it is managed, I can just give you an idea. How it is managed, that there is a agency relationship between the two parties. And agency theory is explaining the relationship between the two parties. Okay, and in the case of companies, I'm not going into the detail of agency theory, but I can just tell you that in the case of public limited companies, shareholders are the principals, and they hired their agents, and the board of directors are their agents. So the board of directors have to put their efforts to achieve the objectives of the shareholders. Okay, so that is about companies, and that is about different types of business organizations. So can I move forward? Any
Uh,
question you
Please.
have?
yeah, I have. Do have. You said like the main difference in private and public limited company, that public limited company can sell their shares. Okay. So is there any other thing that distinguish both of these companies? And secondly, how simple it is. Like we have the question over here as well, so we will move to the question set to the audience later on. But how simple it is to make a private limited company to public limited company.
If we talk about the private limited company, then it is quite easy, because even in UK, I can tell you, if you want to start a private limited companies, you have to go to the website of the company's house. I think if I'm not wrong, and all the information is there. Okay, even you can just Google it, formation of a private limited company. It will take you to the website. You have to put some details there. It will take, I think, 20-30 minutes. And at the
Mhm,
end, you have to pay the registration fee, which is quite nominal. I think it is less than £10. And
mhm,
that is how you can establish a private limited company, and you can start the business. But if we talk about public limited companies, then it is not as much simple. Okay,
mhm,
there are two documents. One is known as Articles of Association, and second
mhm,
is known as Memorandum of Associations. So if you
mhm,
want to formulate a company, then I am talking about public limited company. If you want to formulate a public limited company, then in that case, you have to fulfill all the requirements which are given in the Articles of Association and Memorandums of Association.
mhm,
Once you have completed that legal formality,
mhm,
after that you can apply for the registration, and then you will get the registration. You will get the certificate.
mhm,
You will get a certificate that your company is registered. But for the public limited company, now there is a complete process which these public limited companies have to do. Why? Because private limited company, let's suppose I want to start a company, and I fill that form which is available on the website, and let's suppose I want to say that the total capital of the business is £100. So I can say that I am the person who is the shareholder, and I will contribute all the money. Okay, so that process is simple. But in the case of public limited companies, the companies have to offer their shares to the public.
mhm,
So then a new process will be started. And that
mhm,
is a process of generating funding from
mhm,
the general public. And what companies are doing for that? Companies have to prepare a document which is known as prospectus. And that prospectus includes the information about the risk and return of
mhm,
the project, expected risk and return of that project which they are going to start. They have to identify the key risk factors, okay, and
mhm,
what expected return they are expecting from that project. So all that information is provided there. Then there is a share application form, and that is
mhm,
a form which shareholders need to fill, and then shareholders have to deposit that money into the bank account of the company. So
mhm,
that is how the peoples are subscribing, are applying for the shares.
mhm,
So the process is not that much simple, because there is a minimum limit of funding that companies need to generate. For example,
mhm,
if a business want to generate 10 million, then 90% of that funding should be
mhm,
generated. Proof of that should be given to the registrar of the companies. So if
mhm,
a company is not able to generate 90% of the fund, then they have to roll back everything, and they have to finish everything. Why? Because the public is not interested to provide that much funding in that project. And if you're not receiving 80% of the 90% of the funds, then it means you can't start the business. So there is
mhm,
no point to retaining that funds. Company has to roll back its operation, and they have to return back all the funds which they have generated from the general public.
mhm,
Okay, but for covering that sort of risk, normally the companies are taking help from the investment bankers.
mhm,
And what these investment bankers are doing, investment bankers are giving this surety to the new company, that if, let's suppose, the peoples are not purchasing 90% of the shares, then we will purchase the balance, so that you have 90% shares. But again, it is not very easy to convince the investment bankers, because
mhm,
these investment bankers are in the business, and they have the team of their expertise who are doing also things. They evaluate your venture, your project, and then on the basis of that, if they find that there is some potential, only then they will provide you funding. They will
mhm,
provide you. They will work with you. Okay, they will give their consent that okay, we are ready to give that consent. Otherwise, let's suppose you are getting 50% funding from the peoples, then investment bankers have to contribute the balance. So it will be a problem for them. And normally these investment bankers have their clients because they are the banks. And one more thing which I just want to add, because you have asked that thing, so I can explain that we said that the companies are selling the shares. So if you want to purchase the shares, then in the UK it is quite easy. Even in Pakistan it is quite easier as well. Now, because you can deposit the money in the bank account of a broker. And why broker? Because an individual, the general public, don't have the right to purchase the shares directly from the stock exchange. You have to be a broker. Only then you can purchase the shares, buy or sell the shares for you or for the behalf of others. So the peoples have to open the brokerage account with the brokers. And in the UK, you can see that all the banks, they have their brokerage accounts as well. So if you want to invest money, you can. If you want to purchase the shares, you can open a brokerage account, share dealing account or brokerage account, and you can deposit money in that. And then after that you can see the share prices live. And then if you want to, you can buy or sell the shares. Okay. So in the same way, when we are talking about the investment bankers, these are the financial analysts. These people have their clients as well. The peoples who have money, and they want to invest their money. So these brokerage houses, sometimes they are selling their tips as well. That this company is the good one. You can sell your funds in that. So that is how investment bankers have their own clients, and these clients have a trust on the investment bankers. So whenever they are giving there some tip that this is a good company, so or when the investment banker is involved in that sort of you can say the IPO, initial public offering, then in that case, their clients have a trust on them that a venture is good. So their name is on stake, their reputation is on stake. So if you want to to work with an investment banker, then your project should have some you can say some strength, and there should be some potential. Only then you will get the funding, you will get the consent from the investment banker. But it is a long process. But that is the other thing which I can tell you, that private companies straight away you can start the business. But for the public companies, there are so many legal requirements which the companies have to do. If you want, then next week we can talk about the financial markets, and we can talk about IPO, secondary markets, and over the counter markets or AIM. We can talk about these things as well. What do you think?
That's absolutely fine, sir. Sorry for interruption. That's absolutely fine. I think we are here approximately 40 minutes gone, and still our main topic, like the sources of finance, still behind it. So
Okay.
might be, I mean, we can go for approximately 1 hour and 15-20 minutes anyway. For our viewers, I have received a couple of questions. So for the rest of the viewers, please leave your question in the comment section. Once Mubashir will finish his a presentation, then we will go individually every single question and we will respond you back. Sir, before you move to the next section, I have simple question. I have a private limited company. Is there any turnover, or for example, when we talk about the financial ability or capability of the organization, like how much the profit or the turnover my company should have, or overall like the financial value of the company, or when I want to convert to the public limited company, so is there any minimum or the maximum number of the shares that I need to basically offer to the general public?
No, it is not based on your turnover, that how much your turnover will be, and then you can convert a private into the public. It is not like that. But again, for the private companies, normally you can see that there are few friends or relatives, they have started a business. So again, there are only few persons, so they cannot contribute. I am not saying that every time it is not possible, because there are a lot of wealthy investors, they can provide millions. Only by one person can invest millions of pounds. But in most of the cases, it is very difficult for the small savers that to contribute millions and billions for the business organization. So you have started a business through private limited company, and now you can see the potential. You can see that there is enough demand available, and you want to grow, you want to expand. So you can convert your company, complete the legal formalities, and convert it into public limited company, and then you can get the funding from the public. So that is the main thing. So there is no threshold, that much threshold should be there, and then after that you can convert it in private into a public.
All right, sir. Thank you.
Sir, I have a question. Like you said, like if we like buy the shares of the company, so we participate in the economy. So how the brokers they participate in the economy, like the brokers, what
In the brokers in the economy are for their own economy.
in the economy of the
Okay.
country
Yeah,
actually.
yeah. Because why brokers are there? Because if the brokers are not there, I or you or let's suppose all of us want to invest £1,000 in the shares. So if the brokers are not there, you have no right to purchase the shares directly from the stock exchange. So he is a middleman. So the stock exchanges have their brokers, and these brokers can buy and sell shares on your behalf, because the process is not as much simple. For us, it is quite simple. That let's suppose the price of the 1,000 shares is £1,000, and I have £1,000 in my share in my account, and I can purchase 1,000 shares of that. So I think that I have £1,000, so I will just call him, or I will give an online order, and the transaction will be executed in if you use the online platform, you can purchase the share. The shares can be transferred in your account in 15 seconds. So let's suppose just right now the price is 107 pence for a company, because in London Stock Exchange the price is in the pence, not in the pounds. So let's suppose just right now the price is 107. So you check the price, and there is 15 seconds for you. If you want to purchase the shares, you have to deal. You have to press that button in 15 seconds, because after 15 seconds the price will be changed. So it is that much quick. So that broker is providing that platform, so you are interacting with the broker, and for you it is just a 15 second story. But for the brokers there are a lot of things, because the shares, now what the broker need to do are his are on back end. What he has to do, he has to transfer the ownership of 1,000 share from someone who is living, let's suppose, in US, and he want to purchase that shares, and he has opened that account with a broker as well. So he will transfer your share, he will transfer his shares onto your name, and the money which is in your account, he needs to transfer from your account to his account, and the person is in US. So so there is a lot of complication on the back end, which the broker are completing. They are completing that process. And how they are generating profit, that is what I said, that what is the benefit for them, but how they are getting some economic benefit from providing that sort of service. So how they are what benefit they are getting? They are getting commission. In Pakistan, I have forgotten, because I was trading in Pakistan in 2003-4 when I was there. But I don't remember that what is the brokerage charge there. But here in the UK, on each transaction, if it is a buying or if it is a selling transaction, the brokers are charging between £10 to £15. So every time they are charging commission, and that is their commission. So that is their benefit. And they are how they are contributing, because they are helping to transfer the funds from small savers to these large public sector organizations. So that is how they are contributing in the process.
Yeah, that's fine. Got your point.
Okay, okay, thank you very much. So now we can talk about the sources of funds. Is that fine? Or we have
Yeah,
any other
that's
question? Okay. Okay. So if there is no question, then we can talk about the sources of fund again. I am starting from the sole trader. So what are the sources of funds available for the sole traders? So sole traders can invest their own money, okay, and whatever they will invest, that will become capital. So if they have small saving, they can invest that. Second thing, they can take the loans from the family, friends, or from the banks as well. Okay, normally the banks are offering the credit cards and the bank overdraft to the small businesses, if you are starting a small business, so you can use that money. Or if a person has invested. If a person need more funds, he can use his own credit card or his own, you can say, bank overdraft, and he can fund that, or he can take up a loan for himself. So that is what he can do if he want. So that capital and debt sources are there. But instead of that, another source which is available, that is known as business angel. So these business angels are the wealthy investors. Okay, and definitely you have seen that program Dragon Den. So that Dragon Den, that is what they are doing. So the businesses which want to generate the funding, they pitch their idea in front of the dragons, and if the dragons see any potential in the project, they will give money. Okay, so these business angels, because they want to generate profit, they want to maximize their wealth as well. That is why they are giving, or they are ready to invest money into small ventures. Okay, so if you convince any business angel, you can get the money. And the money which you get, it is normally, it is between 10,000 to, you can say, 100,000, even though they are ready to finance you around 500,000. That is what research has shown. But overall, it is between 10,000 to 100,000. That is the amount which they are giving. Okay, so that is about business angel. The third source, the another source which is available is venture capital firms. So you can get the funds from the venture capital firms as well. So what is venture capital firm? So they are same like business angels, that a firm is there who is providing money to the entrepreneurs, to the small businesses. Okay, but the benefit you will get if you get the funding from the venture capital firm, what additional benefit you get? These venture capital firms have their team of specialists with them. Okay, so they have their contacts. So if you are getting funding from them, then their specialist will help you. Let's suppose for different financial, marketing, HR, for different production as well. If you have any sort of complications, so you can get some free advice as well, because these experts are charging a lot. And as a sole trader, you're not in a position to get that much, to pay for that much, that high amount for for their expertise. So the benefit of venture capital firm is that you will get the funding, plus you can get some free advice suggestion as well.
Mhm.
So these are few sources. And one more thing which is available here in UK, and that is government grant. So governments are giving different types of grants. There are two, three grants. Okay, one is for the entrepreneur. One, I think in 2013 they have they have started a program, and under that they have started a British something bank, I think, and that is only for the small scale peoples, because in 2012, 2013, the country was still struggling financially, you can say, because a lot of people have lose the job. So instead of helping the people to go back to the job market, government thought it is a good idea that we should provide some sort of incentives to the entrepreneurs, so that they can start their business and generate job opportunities for the individuals.
Mhm.
Okay, so that is about the sole traders.
Mhm.
So
So
after that,
I have a couple of questions here. The government for every country, of course, they help the business a lot in order to
every
basically
country,
fund it.
in every country, are you sure?
I mean, of course, even if we talk about Pakistan, I think the government, I mean, according to the government sources, whatever, of course, they have in there, basically, you can say the banks are in hands. Of course, they try its best to
If
accommodate
they
the
want to, yeah.
businesses.
If they want to,
And
definitely there are mechanisms, yes.
and I don't think so. I mean, there will be any country in the world that they are not supporting their business. Of course, if they will support the businesses, it will give the return to the country, and the economy will boost up, of course, and the government will get the benefit of it.
Yes, yes.
Even if we talk about here in the UK, see, even the COVID-19, they have given hundreds and thousands of the grant and the loan to the private and the big businesses as well. I mean,
You're right.
ultimately, the government is looking, I mean, there should be no slump in the economy at least. Uh, in relation to the business angel that you're talking about, I believe what I heard from your conversation, if you have very unique, you can say, the idea, the proposal for a business, so these venture capital, or you can say the business angels, they are willing to do the investment, and of course you have the skill and you have the knowledge, and in this way you can run the business. So don't you think it's a good idea? Because if I already have good knowledge, I have good skills, I know how to run a business successfully, and my idea is also unique, so it's better idea we can get some sort of the finance or the grant from the government, pay a little bit interest on that, and then after some period of time, at least you will be free and you can move on with your business. Might be if you go to the business angel or the venture capital, might be you have to pay some sort of the percentage on the profit on the businesses, so might be technically you will be in the loss.
You know that it depends upon your business or financing requirement as well. There is a possibility that you started a business and the business is growing, you have exhausted all the government grants, so still
Mhm,
you need some more money. So
mhm,
then in that case, that is useful for you. But definitely the first option should be the government grants. Why? Because you have to pay less cost on that as compared to the business angel. But again, if you have exhausted that limit, let's suppose that the government are giving you £10,000 of grant. I don't exactly know how much they are paying, but let's suppose they are paying you £10,000 and you exhausted, still you need more money. So then definitely you have to find another way. So
mhm,
that can be the option.
mhm.
Okay,
Thank you.
there are some new sources of funding as well. If you want, we can talk it here. I think it is better to talk it here. And these are the crowdfunding.
Mhm,
So because the age in which we are living, that is possible now. That if you have a unique, you can say that it is unique idea, but you can say any idea which will work. Even if you will see that governments are not supporting the monopolies. Okay, so if we are talking about a unique idea, then it means there is only one person who is doing that sort of business. So even when you have started a business, and there are a lot of other businesses who can, businessmen who can see that it is worth to invest in that particular idea, then a lot of people are coming to that market, and that is how it happens. Because if a person is coming out for starting a business, he started his business, and there is so much demand and it is impossible for him to meet. So that is how new peoples are coming, and they start manufacturing that product and selling that product to the peoples. And then after a particular time, when there is enough saturation, then you can see that more peoples are not coming and doing that business because they don't find any sort of incentive in that. Okay, so crowdfunding is there, and what is crowdfunding? That if you have an idea, you can launch your idea. There are different funding platforms available in the UK and in US. So you can launch your idea there, and then that is how you can attract the peoples. And the platforms which are providing you that facility where you can advertise your ideas, they are taking a small percentage from you. So that is another modern technique. There is another technique as well, which is equivalent to that crowdfunding, which is known as peer-to-peer lending. So that is also possible because of the internet. But it is a lending. Normally that is a lending source, and peoples are using that source if they want to purchase a particular thing. Let's suppose I want to buy a car and I need funds. So what I will do, I will contact different people that I need that much money. Are you ready to give us that loan? I don't want to take the loan from the bank. Are you interested to give me that loan? So that is another option available. Okay.
So what is the difference between peer-to-peer funding and long-term and short-term funding? Is that difference between these things?
Long and short-term funding, normally these are the sources of funds available for the small businesses, and these fundings are available for, you can say, short to medium term. Not, you can't rely on them for the long term. That is why the sole traders and partnerships are converting themselves into the public limited companies, because public limited companies can sell shares, and shares have no maturity date. So that funding is available for you for indefinite time period. But if you are going for any bank loan, if you are taking any loan from the business angels, or money from the business angel, from the venture capital firm, then it is all these sources are available for short time period. Because business angel, if he sees that you were making good profit in the last, let's suppose, 3 years, but now you are not making enough profit, so he can say, okay, I don't want to invest with you anymore, so give my money back. So the permanent solution is is the companies. Permanent solution is companies, that you convert yourself in a public limited company, and in that way you can generate funds from the general public, because the share capital, with the funds which you are generating by selling the shares, it is available for you for indefinite time period. Okay,
Okay.
is that fine?
Yeah.
Okay, so that is about the sole trader. Now we can move to the partnership. So
Yeah.
all the funding sources which we discussed, they are also available to the partnership as well. For example, capital. So partners, there are 5 partners, 7 partners, 2 partners. They can contribute money in that. That will become the capital. Then these partners can take loans from the banks, from their family members, from their friends. Yes. So
Yes.
can I continue?
Yes, please.
Okay. Okay. So that source is available there as well. Then that business angel venture capital firm, government grant is available, and that crowdfunding. All these sources are available because the sources are same for the sole trader and partnerships. Okay, so now we can talk about the last one, which is company. So sources of funds for the public limited company. And first of all, we can talk about the long-term sources of funds, and then after that, we will talk about short-term sources of funds. So long-term sources of funds, as we said, that shares. Companies can sell the shares to the general public, and that is how they can generate the funds. And there is no maturity. There is no maturity. These shares are issued for an unlimited time period, and that is why you can see that these companies have very long life. I think Debenhams have started their operations in 1880s. So Mark and Spencer has started their operations, I think 130 years, 120, 130 years before. Tesco has started their operation in 1920, I think. But I remember that it it converted from a sole trader, I think, to the public limited company in 1947. I remember the date 47, 1947, because we got independence in 47. That is why I remember that when actually Pakistan, when we said that when we talk about
Exactly.
the company, then at that time Tesco has also got the status of public limited company. So see, around working from 70, 80 years.
Mm.
So that is the reason that these funds are available for unlimited time period for these companies. And there are 2 types of shares as well. Do you want to ask something, Mahmood? Hamoud?
No, no, that's fine. You can carry on.
So if we talk about the shares, then there are 2 types of shares. One is ordinary shares, and second one is preference shares. So what is the difference between the two? There are 1 or 2 differences. The first thing, the common point in both of them is that both of them are the equity sources. Both of them are the types of shares. So the people who purchase these shares, they will become owners of the company. Okay, and if we talk about the differences, the first difference between the two is the dividend. Preference shareholders are getting fixed amount of dividend, while ordinary shareholders are not getting fixed amount of dividend. It depends upon the managers, especially the finance director, finance people, that how much dividend they want to distribute in a particular year. Okay, so that is one difference. Second difference is that if a company is liquidated, then at the time of liquidation, the preference shareholders will get their money first. And then if there is something left, then the ordinary shareholders will get. But remember, it is not starting from the preference shareholder. First of all, secured creditors. All the assets of the company is sold out, and the secured creditors get their funding. Okay, get their money back. The secured creditor, then unsecured creditors will get their money back. Okay, and then preference shareholder, and if something's left, ordinary shareholders will get their money back. So that is a difference. One more difference which is there is that the ordinary shareholders have a right to cast their vote. While while if we talk about the preference shareholders, they can't cast their vote in the director election. So that these are few differences between the two types of shares. Okay, and as we said that in that money is available for indefinite time period. So these are the equity sources. Now we can move to the debt sources. So these companies, these public limited companies, can generate the loans as well. They can go to the bank, they take the loan from the bank, and they have to pay the interest. And we are talking about long-term sources of funds, so long-term sources here definitely more than 5 years of loan. Okay, the second option which is available is the issuance of bonds. So the public limited companies can sell the bonds. So what is a bond? Bond is similar to the shares because it is a security which is tradable on the security market, on the stock exchange. But shares are equity security, whilst bonds are debt security. If company want to take loans from general public, company can sell the shares to the general sorry, company can sell the bonds to the general public, and the shareholders are getting dividend while bond holders are getting interest. So company is paying interest regularly to the shareholder, to the bond holders, and these bonds are also issued for the long time period. There is another source. There is another source of loan as well, and that is known as leasing. So instead of taking the loan from the bank, the company can request the financial institution, any bank as well, that we need this particular asset. Can you purchase that asset for us, for so that we can use, and we will pay you rental on that. Okay, so that is leasing. So the financial institution, the bank which is purchasing asset, is known as leaser, and the individual or the company which need to use that asset, it will become leasee. Okay, then there are two types of leasing as well, financial and operating, but we are not going into that detail. Okay, so but leasing is an option. Okay, so that is a type of loan. Instead of taking loan and then purchasing the asset, you can straight away. Let's suppose an organization need a plant and machinery. So instead of taking loan from the bank, they can request the bank that we need that particular plant and equipment. Can you purchase that for us so that we can use, and we will pay you rental, and we will purchase that as well at the end of its useful life, or after a few years. Okay, so that is another option available to the company. And the last option for the long-term funding, we discuss about the equity sources, which are ordinary share, preference share. We discuss about the debt sources, which are bank loans, bonds, and leasing. And the last option which is available is retained earnings. We have started our discussion in the start about retained earning. Okay, so the profit that is retained within the organization. So that is known as retained earning. And what is the reason for retaining the profit? The reason is to meet the funding requirement in the future. And why it is retained by the organization, why organizations are not generating the money by selling the shares or bond, why retained earning? There are some benefits available for the retained earning. So if organization, so I can see the questions. There are some questions. Will pop up for a few seconds. Let me finish this, and then we can go to the questions if you want.
All right.
Okay. So, so we were discussing about the benefit of the retained earning. So the benefit of the retained earning on other type of funding option is that it is very quick, it is very flexible, and it involves no cost. For example, company need to sell the shares, or company need to sell the bonds and generating the funds through that, then they have to complete a legal process which will take few years, oh no, sorry, few months to complete. Okay, so companies need to wait. While if they rely on the retained earning, they have to take the decision and the funds are available in the bank account next day. And the process which companies need to complete, that process, the process for selling the shares or bonds to the general public, it is known as flotation process. So that flotation process, for the completion of that, company need to pay some sort of money to the accountants, to the solicitors, and advertisement and everything. But here, retained earnings are available in the bank. You don't have to pay nothing to anyone to use that retained profit. So that is another benefit of the retained earning. So these are the long-term sources of funds available. Now, short-term sources of funds, we can discuss about them. So short-term loans, bank overdraft. Okay. So instead of that, another option which is available to the company is that they can reduce their inventory levels in the short run, and they can utilize that money. Another option available is that you can take some more time from your credit suppliers, and you can use that fund somewhere. Or if you are offering credit sales to your customers, you can put some restrictions on that. So that is how you can have some additional funds available. And another option which is available is factoring. So normally these financial institutions like commercial banks, they are acting as the factor. And what is that factor arrangement? Factor arrangement is that you are selling your goods to, let's suppose, person A. Person A has requested to sell goods of 100,000 pound to him on the 3 months credit. So it is very difficult for you. What you can do, you can go to the bank and you can say that I am interested to sell these goods, 200,000 person A, but he will pay after 3 months. So is it possible that I will sell the goods to him and you will pay money to me as a factor? Can you act as a factor? Can you purchase my trade receivables? Okay, so if the bank is ready, normally banks are giving 80% money straight away, and the remaining 20% when the person will pay back. And definitely the factor firm or the factor, whatever financial institution is acting as a factor, they will charge their commission and interest and so on. So that is also a short-term sources of fund available. So I think
Thank you
that
very much, sir.
these are the pretty much, yeah. Okay,
We
you're
have a
welcome.
few.
Is- have you finished, sir?
Yes, yes. I think these are the sources which came into mind. I think I covered more of them. Mushtaq.
Thank you very much, sir, and sorry
Thank
to
you.
disturb you. Actually, we have a lot of questions, and I think our viewers might be before they get bored. So I think we should go to the question set now, and if there will be anything pending, we can discuss later on. So, sir, to the point, precise answer for every single question, please. I start from the top. Here is a question about the role of stock exchange. So I'm not sure either this is relevant to the topic or you
I
want to
can
give.
explain you, but it will take time. And one thing, as we discussed previously, because IPO and right issue and all such things we haven't discussed. If you
Mhm.
want, we can conduct a session next Sunday on the financial markets.
Yeah,
So
I
the
think
role of
it's a good idea because
in
the
one
role of
sentence,
stock.
in one
Yes.
sentence, what I can tell you that at the time of sale of shares, the shareholders get the people who have applied for the shares, they get the shares, and the company get the funds. And let's suppose
Mhm.
company need 1 million pound to start the business, so all the money is invested in the business. So I am person X, let's suppose person X go to the business. He said that after 3 months he go to the business. He said that I deposit or I invested 10,000 pound in my shares. Now purchase these shares from me and give my money back. So the company cannot pay that money back because the money is invested in the project. So what you can do? What is the other option? Whether option available for you? You can go to the secondary market, which is known as stock exchange. So the people's investors are buying and selling the outstanding shares
Mhm.
among them in the stock exchange. So it is
Mhm.
a financial market where people can buy or sell the shares and bonds of the company. That is the simplest answer. But if you want the detailed answer, then we can give that answer next week. We can talk
Thank you,
about
sir.
the types of financial markets next week.
I think that's relevant to the previous question and is from Shakrat Rama. I think
About,
he's
yeah,
your student as well. So he's talking about, can you please explain a bit information about stock exchange investment?
so if you want to invest your money, that is what he want to ask. So if you want
Yes,
to invest,
yes.
if you want to purchase the shares, then you can open a share dealing account here in UK. Okay, so if you have a bank account with any of the bank, you can open a share dealing account with them, because all these banks are acting as a broker as well. So once you open a share dealing account with a broker, then they will give you your password, username, and you have to deposit money in that. Normally they ask to deposit around 500 to 1,000 pounds, and after that you can see the live prices, and then you can decide what share you want to purchase. So it is that much simple here, and it is quite simple in Pakistan as well. I don't know what is the procedure now and how much advanced is that, but I remember in 2003 and 2004 when I was trading there, I just called to my broker and he transferred the money in my account. He transferred the shares in my account. So it was only a phone call. You just have to make a phone call, and everything is done. And I don't know how much advanced it is, but I am hoping that I think that sort of facility will be available there now as well.
Mhm. Thanks, sir. Another question from Lisa Batcher. How can we make a private limited company to public limited company?
How
I
we can
think
convert?
you have a detailed discussion on it, but still, of course, to satisfy our
How,
viewers, they are looking for the answer.
okay, so how you can convert the private limited company to the public limited company? You have to complete IPO process, initial public offering. You have to sell the share to the general public, and that is how you can convert your private limited company into the public limited company, and you have to complete all the legal requirements as well.
Mhm.
Okay.
So does all these requirement different in different countries, or there is a
I
standard
think I
procedure?
think I think I think there is some sort of difference, because in UK, I can give you example of UK. The laws, they are changing the laws regularly. So, but in other countries, you cannot see the amendments in the law as much quick. So definitely, it will be different in different
Mhm.
countries, I think.
Mhm.
Okay.
Okay, sir, that's a lengthy question from one of my friend, and he was my fellow as well over here in the UK. And he's saying the
Give me one
big companies don't pay the taxes because they are paying thousands of employees every month, and they are contributing their national insurances and employee insurances, etc. Okay, so in this way, of course, these companies are contributing to the country's economies as well. So please share your point on this
second.
one.
You know that there are two different types of taxes. One are the taxes which employer need to pay, and what are the taxes which employees need to pay. So definitely these companies are generating employment. That is a benefit for the economy, and definitely that is what all the governments want. So that is how they are contributing. But you cannot mix the employee taxes with the employer taxes. So employers are paying some sort of taxes as well, and when you are providing jobs, you are getting some sort of, I think tax breaks as well, or holidays, are some sort of you can say discounts on that as well. So that is how you can say companies can contribute to the economy. But companies have to pay taxes as well. But because you know that they have the team of experts with them, and the large companies are always involved in the tax planning. And what is planning? Legal ways through which you can reduce your tax liability, and that the income tax authorities have an idea about that, and they are providing these facilities to you. If you want to, you can get these benefits. Okay,
Thank you, sir.
you're welcome.
A question from Bintian, sir. Can you explain the difference between ordinary and preference shares?
Ordinary shares are the shares on which company is not paying a fixed amount of dividend.
Mhm.
Okay, but on the preference shares, company need to pay a fixed amount of dividend. Let's suppose 5% preference share. If you see on the balance sheet statement of financial position, which is known as balance sheet, but now it is a new term, statement of financial position. If you see the equity preference shares there, you will always see 7%, 3%, 2%, 9%, 11%. What is that? That is the rate of dividend which the preference shareholders are receiving. So fixed amount of dividend, that is one difference. Second, the second difference is, as I said, that at the time of liquidation, preference shareholders have a first right to receive their money back, and ordinary shareholders have the last right to receive their money. That is another difference. Ordinary shareholders can uh, cast vote in the directors' election, while preference shareholders cannot. And there is another options available, which is the the let's suppose in a particular year company hasn't paid any dividend because they are in the loss, so they haven't paid any preference shares dividend to the preference shareholders, so that dividend will be accumulated, and next year the company need to pay the dividend to the preference shareholder for the last year, then they will pay dividend to the preference shareholder for the current year, and if there is something left, then the ordinary shareholders will get. So that accumulation of dividend is a feature. So these features are attached to the preference share. Sometimes the preference shareholders have all these preferences, and sometimes one, two, or nothing. Okay, but fixed dividend is there every time.
Thank you, sir. We have another question from Mr. Khan. He is asking about studying a degree in financial investment. Sir, as you are in the higher education for nearly 2 decades, and you have supervised hundreds of students' work and their dissertation, both in thought and the research courses. So, as an educationist, as a principal, you can say the lecturer, what do you guide to your students, like how they can get the benefit of financial investment? What is the potential of this degree in the future?
There are a lot of potentials. There is no doubt about that, because as we said about the investment banking and financial analyst, so there are so many careers which are available, and there are so many degree choices which are available. You can do the master degree and master degree from any university. You can go online and you can download the perspective no, prospectus of that university. The best thing is that now, that previously I was in Pakistan and I checked the prospectus, they just said that this is a degree in accounting and finance, this is a degree in investment banking, but you are not able to get the detailed information that what modules you will study and what main topics you are going to study there. But now the best thing is that you can open their prospectus and you can see each and every detail there, that these are the modules which they are going to offer, and a brief summary under each module, that these are the topics which we are going to cover. So you can start your career from undergraduate degree and then postgraduate degree. That is one route. The second route is the professional qualification. The best degree in the field of investment and financial analysis is CFA, Chartered Financial Analyst. That is an American degree, but it's a professional degree. You can go to their website. You can enroll for that. They will send you the study text as well. You can prepare by yourself if you have knowledge of these type of you can say accounting and finance and investment. You can continue your study by yourself, or you can take any private tuition in, even in Pakistan or here anywhere. It is same like ACCA and CIMA. You can give their exams, and the tuitions are peoples are taking tuitions anywhere in the world, and they have their exam centers as well. And now most of them are trying to take online exams, so you can complete CIMA, ACCA, and CFA by staying in any country, because they have the exam centers. And there are a lot of tuition providers are available in these countries as well. There are lot of online platforms which are providing you a lot of information, especially Investopedia. It is a very good website, and you will find a lot of information about the CFA modules. I checked last year. I don't know are they providing that sort of support now or not, but a lot of material for CFA was available there. So there is good potential available. But one thing which I just want to add one thing. I don't know you agree with that or not, but that is my personal feeling. I can share it with you. That is my personal view. I can share it with you. I don't think so. Yeah, you will agree or not. Don't see that which degree has the potential. Just find out your interest and then do something. Because if you know your interest and you will do that thing, then definitely it will help you a lot. I have seen there are a lot of people in Pakistan, even when we were studying there in the school colleges, there were a lot of people who were teaching Park studies. And I don't want to say that what Urdu and that sort of modules, and they are good teachers. That is why they are making good money. So why? Because they have interest. They have passion. They were passionate about their work. That is why they did well. But I have seen a clip of what is his name, of Bill Gates, and I have seen. I don't know in what context he said, because someone has shared a small clip on the WhatsApp, and I have just watched that clip. And what he was saying that the that the future is for biotechnology. So study something, because he said that in 70s there was future for the computers. That is why I dropped out from Harvard, and I have started that, and I made very good money and very successful career and everything. Everyone in the world know him, but that is what you are saying, that sort of opportunity is available in biotech. And if you want to start a career, then start in the biotech. So I think he don't want he was not saying, that is my impression. I don't know that was his perspective, because I have seen a very small video clip. It was his perspective that forget about your interest and do that thing. That is what he want to say. I don't know that. But I think if you have interest in anything, you can do it well. Otherwise, you can't.
I undoubtedly agree with you, sir. Sometimes the student take the admissions, especially in mathematics or finance, whereas like they struggle a lot. So of
Yeah.
course you need to see where exactly you
Yeah.
wanna go, and
Right.
in
One
which
example I
area,
can
in which module, in which subjects you are expert. Okay, and have some basis for that.
totally agree with that. And I just want to tell you one thing, that whenever there was only any HR module or any marketing module in my MBA degree, oh, that was a nightmare for me. I don't want to study that. I don't want to see that book. And especially in 9th, 10th, I remember, I don't want to study anything of biology. I really hate that module. But if I want to get that matriculation certificate, I have to pass that. So it depends on the interest. So I can't read something which is not giving any interest to me. So it is
Sure.
about, I don't know that you agree with that viewpoint or not, but that is my viewpoint.
I agree, sir. Another important question, sir, from Rao Omer. Without making it relevant to the Pakistani politician, or you can say your ex-prime minister with the Panama Leak, he's asking what is the benefit of offshore companies and why the people make it.
Why the peoples are making it? Because of some tax benefit, I think you can say. That is the
Mhm,
simple answer, without talking about anything
mhm,
about politics. That is the simple
mhm,
answer. But
mhm.
but if you are talking about anything which is dealing with corruption, then definitely I have no idea about that how you can use that mechanism.
Okay. So is these offshore companies we can make and in any country or there's specific region in the world?
I think you can establish anywhere, but
Mhm,
the problem is that where it is most helpful for you. That is another
mhm,
question, and it is based on the rules and regulations of each and every country.
mhm.
Yeah.
All right. Thank you, sir. Another question from Ra. If the company is closed due to loss, company didn't perform well, or due to bankruptcy, etc., there are liabilities on. So, are there still liabilities on the director or the shareholders?
Okay, so you said liabilities on the directors are on the shareholders. Okay, so we have discussed that point in the start. We said that the shareholders have limited liability. So what is the meaning of limited liability? That if you have invested £1,000, you can lose your £1,000 if the company is bankrupted, let's suppose. So the
Mhm,
shareholders have to bear that loss. Okay, and I told you the order of the payment by the companies as well. First of all, if there is a bankruptcy, all the assets are sold. So secured creditors will get their money back first. And what are the secured creditors? If the company, let's suppose if the company has sold the bond, and they said that we are selling these bonds against this particular plant and equipment. Okay, so the bondholder, if the company is bankrupted, bondholders can sell that particular asset, and the money will go directly to them because they are secured against that asset. So if the company make the payment to all the unsecured secured creditors and still they have some cash left, then the unsecured creditors will get the money back. If they paid all the unsecured creditors and still money they have some funds left, then preference share. And at the end, ordinary shares holders. And if nothing left, ordinary shareholders will not get anything. Why? Because when they purchase the shares, they know that their liability is limited to the amount of their investment.
Mhm.
Okay.
Thank
And
you,
the
sir.
share is the directors. When the directors are liable, not directors are not directly liable if they haven't did anything immoral, illegal. They are not. But in the case of different organization, you can see that the directors are in the jail. The best
Mhm.
example is Enron,
Mhm.
bankrupted because of the accounting frauds. So what has
Mhm.
happened? After the bankruptcy, the investigation has started, and they found out that the CEO, CFO, they they were guilty, and they faced a lot of fines and imprisonment as well. But that is
Mhm.
only when they involve in any sort of fraud, they committed any fraud or that sort of thing. But if the directors are hired, then definitely in that case they are not. They are not. But
All
if they
right.
purchase the shares as well, if they purchase the shares, then definitely they are liable not as a director but as a shareholder.
Thank you, sir. Another question from Rao as well. The young entrepreneurs, especially the entrepreneurs, they are getting a lot of pressure from the investors. Of course, like if someone has invested the money in any joint venture or in any company, of course, they are looking for the more profit. So
Mhm.
he's saying basically the investor put a lot of pressure on entrepreneurs. So is there any you can say reasonable, the good model for them that they can negotiate with them?
There is a good model of financing to negotiate.
Yes.
You know that it depends on your negotiation power. Okay, as a business student, definitely you have studied that Porter's five forces model. So you know that if you have the negotiation power, then you can negotiate and you can get some sort of incentives. And if
Mhm.
you are not in the negotiational power, then definitely you are not. And as an entrepreneur, as a startup business, I think it will be very difficult to negotiate. So the best thing is to consider the option on the basis of cost and benefit analysis, and then go for the best one. That is the only thing which you can do in that
Mhm.
case.
Mhm.
But here one thing is there that the government grants are available, so that is a good idea. And I think in Pakistan, Imran Khan has started that sort of thing as well, that loans for the people who want to start the business. So that is a good initiative. So I think
Mhm.
that should be the starting point. First of all, use that because I think the interest rate is less. So use that, and after that, you can go for the expensive sources of
Mhm.
funds if you need additional sources. But the best thing is that if the business is established, then it is better to go for the other sources of funding. I know that when we are talking about the public limited companies, then it is very expensive to run. It is very expensive. There is no doubt about that.
Mhm. Thank you, sir. Finally, the last question, again from Ra. I think, is there any the future for the digital currencies? Time to time, basically the practices and the technology is changing as well. So from today onward, what we see the future of digital currencies?
You know that the technology which they are using, it is very helpful. Even people are using that technology into different other industries as well. So the technology is good, but what is the future? I think it is based on the regulations of the country, because you know that 2 years before, the price of one Bitcoin was around, I think, $20,000. $20,000, I think dollar. It was $20,000. But after
Mhm.
that, it has gone down. And why? Because lot of central banks and the countries has said that it is not legal to trade in the Bitcoin. So that is why the demand has decreased, because we know that there is a simple law of demand and supply. That was so if less demand was there, that is why the price has gone down. So in the future, if they feel that there should be, it is more convenient for the businesses,
Mhm.
then I think we will go to that, because we never know what will happen. And 100 years, a century, is a lot of long time period. Because at the start of these currency notes and the coins, people were there were a lot of problems. There were a possibility that people will not use it, but with the passage
Mhm.
of time, everyone has used it because it was quite convenient. So if Bitcoin is convenient, if that there will be if the regulators are able to find any mechanism, then in that case, then you never know, that
Mhm.
might be used in might be used after you can say 2 3 decades. That is the only currency which is used around the globe.
Mhm.
Okay.
Thank you, sir. Hamoud, finally,
No,
sir, all the questions have overcome. I think we responded all the questions anyway. Hamoud, do you have anything in your mind, or then
No,
finally we can
no,
wind up?
thanks, sir, for your time, and I hope like listener and viewer they got benefit from your session and your like expert opinions and views as well. So,
thank
and
you.
we got
Thank you very
benefit as
much.
well.
Thank you very much, Amod. If it is helpful, then definitely it is my
Yeah,
privilege that I spend some time
Let
and
me see.
there is some sort of some positive outcome of that. That is great.
Sir, a compliment from viewers for you. It's a great session. So
Thank,
thank you very
thank,
much, Rob.
yeah.
thank you very much, Rao, and
Thank,
all the people who have participated in that session.
Uh, Sir, I think while doing this session, we have taken two, three things, especially the Bitcoin that he has talking about, the future of digital currency. I think this is very wider topic, so might be we can organize some sort of the session on this one as well. The role of stock exchange, how the investor can get the benefit of this risk involved in the stock exchange investment. So I think this is also very useful topic because
You can check. You can
thousands and hundreds of the people are, of course, doing the businesses in the stock exchange. So we can have some sort of discussion on this one as well. What do you think?
Yes, yes, I think instead of only talking about the role of stock exchanges, what we can do, we can talk about financial markets. We can have a session on the
Mm,
financial markets where we will discuss about primary,
mm,
secondary, and
mm,
IPO market, and then we can talk about the other types of markets. And over the counter market is there, AIM. There are different markets, so we can cover all of them in a session. You can check your availability. I will check my calendar as well, and then we
mm,
can arrange something.
Thank you, sir. Uh,
No,
for my viewers, thank you so much for watching and joining our session. We have received so many questions and we have answered all the questions, and Sir Mubashir has given his expert opinion on this one. Keep joining the session. We will bring in some new session as well on the different aspect from the different fields, and the guest, of course, they have the knowledge and expertise in that particular, so you can say, the session. Keep watching, and you can see some of the latest video on our Facebook page as well and on the YouTube as well. Okay, so thank you very much. Thanks for your time and thanks for watching. And Hamoud and Sir Mubashir, especially Mubashir sir, thank you for your time, and it was really a pleasure to have you in our session. And of course, in future, we will contact you and we will plan another session with you as well.
no problem. Thank you very much, Saisab. Thank you very much for creating this
thank you.
opportunity. I really like your idea. When you share that idea with me, I really like that, because I think it is good that we can provide some sort of learning opportunities to the people, and that is the future of learning, I think. Because most of the university, that for the next academic year, especially the first semester, most of the universities have decided that they will go online. All the lectures will be delivered online, because
Mhm.
lectures normally there are more than in few modules there are more than 100 students. It is very difficult to observe the social distancing procedure and to conduct the lecture. So I think most of the
Mhm.
universities have already announced that lectures will be online, and there are some opportunities for face-to-face seminars and workshop, because there are
Mhm.
small groups in the seminars and workshop. So I think that is good. That is a good opportunity. I really appreciate your ini initiation, you can say, in that
Thank
way.
you, sir.
So, and thank you very much. Thank you, Sai Saab, Hamood,
Thank
and
you.
Thank you.
all your
Yeah,
listeners.
of course, sir. I mean, now the things are changing, of course, and this I think we are lucky when we have this sort of the availability of the social media and all these web communication tools with us. So I think this is some sort of the knowledge sharing. The class we belong to, like the students and the working class and the business people, of course, if someone has some sort of the ideas, we can spread all over the world, no matter where someone is sitting around. Okay, so I think. Yes, it's a good opportunity for the listener as well. And we will be calling anyway experts every week, and they can share their opinion. Okay, and yes, when we were talking about the in the higher education, how the university go from face to face to online teaching, and of course this was the new challenge for the university especially. We will organize a live session on this one as well, how basically the universities move from live or
Yeah,
classroom
yeah, okay.
environment online, and what were the challenges, what sort of the technologies they have adopted so far.
Yeah,
So this can be one of the interactive session as well.
yeah.
We will be calling some expert educationists on this one as well. So altogether, I think nearly 1 hour 40 minutes we have conducted this session. This is one of the longest session we ever had. So I would like to wind up now. Thank you so much, sir.
You are welcome.
Thank
So all
you.
of you take care of yourself.
Thank
Allah Hafiz.
you very much. Thank you, Hamud.
Thank you.
Okay.
Bye bye.
Bye.